securities.
Okay, so let's get into it. The system's name is Aladdin. That stands for Asset Liability and Debt Derivative Investment Network.
Aladdin.
And the central claims that Aladdin now reportedly oversees something like $21 trillion of the global economy.
21 trillion. Let's put that in perspective for you. The entire US GDP reported around 20 trillion. The EU, maybe 15 trillion.
And think about physical cash, like every single note and coin everywhere in the world.
Yeah.
That's reportedly about $5 trillion. So Aladdin is reportedly connected to, what, more than 4 times all the actual cash out there?
That's the claim. And its reported capabilities.
This is where it gets really interesting.
Yeah.
Apparently, it directs actions of the U.S. Federal Reserve, influences almost every major bank investment fund on Wall Street.
Used by over 17,000 traders, reportedly. Controls half of all ETFs.
Half. And 17% of the bond market, 10% of the global stock market.
It's executing like 250,000 trades every single day. Generates billions of forecasts weekly.
So what's the takeaway here? It's not just another player. It's described as almost like a fundamental piece of market infrastructure.
And how does it reportedly do this? By constantly collecting just trillions of data points.
On markets, companies, assets, and now apparently even data on individuals, what people are buying, selling, even saying online.
To do what? Predict better than humans.
That's the reported goal. To predict market movements and opportunities faster and more accurately than any person could.
And the implication is pretty stark. Major financial players feel they have to rely on Aladdin's AI to win.
Yeah, the narrative is that those who didn't sort of collapsed, couldn't keep up.
So where did this beast come from? The story always seems to point back to one person, Larry Fink, founder of BlackRock.
He's presented as the mastermind, yeah.
Let's talk about his background a bit.
Well, reportedly born in 1952, L.A. Fairly ordinary parents, it seems. Dad owned a shoe store. Mom was an English teacher. Studied political science, then an MBA at UCLA, focused on real estate. Seems he was driven, wanted money, power, influence.
Got his start on Wall Street in '76, first Boston. And this is key. He reportedly pioneered trading mortgage-backed securities.
Bundling up home loans and selling them off.
Exactly. And he rose fast. Youngest managing director ever at the bank. Apparently had a bit of a reputation. Big swinging dick, some colleagues reportedly called him, for confidence, risk-taking.
And it's fascinating because those mortgage-backed securities...
They're the same ones that blew up in 2008, right?
Pretty much at the heart of it, yeah.
But for Fink, the big moment, the turning point, reportedly came earlier, in 1986.
Right, that computer model error.
Yeah, a back-office mistake reportedly led to trades losing First Boston $100 million. Fink left the bank.
And his takeaway from that, reportedly... He later admitted he didn't even fully grasp why it happened, called 80s Wall Street the Wild West. But that failure apparently didn't just sting, it gave him this ambition to build a system, a robot, that could actually manage risk using data properly, rigorously.
Like the Wild West method.
Exactly. So 1988, he starts BlackRock, tiny coding team initially, the specific goal, build that risk managing robot.
And he got backing.
Yeah, reportedly $5 million for a 50% stake. From Steven Schwartzman, the Blackstone founder. They were close initially, then split off in '94.
So Aladdin begins. What was its early life like?
For the first decade or so, it was all about bonds. Fink's specialty, right?
Right.
So they just fed it endless data on the global bond market, prices, risks, everything.
Until
1999. That was reportedly the turning point. Aladdin's about 11, and it's apparently gotten so good at bonds
that they started selling access.
Exactly. Selling its data, its insights to other Wall Street firms. Same year, BlackRock goes public on the NYSE.
And then came the dot-com crash.
Perfect timing for them, in a way. Money reportedly just flooded out of stocks and into bonds.
Where Aladdin was king.
Precisely. That apparently fueled huge growth. BlackRock becomes a trillion-dollar company pretty fast.
But money eventually shifted back to stocks, right?
It did. So Fink makes another move. 2006, BlackRock buys the asset management part of Merrill Lynch.
Why was that so big?
Because it reportedly gave Aladdin a whole new universe of data. The entire stock market. His playground just got way bigger.
And the combined effect of all this, BlackRock plus rivals like Vanguard and State Street, who reportedly use similar analytic approaches.
They become the biggest shareholders in, over 40% of all listed U.S. companies.
That's the claim. And in Germany, reportedly stakes in all the DAX companies, 3 to 8%. Largest single shareholder in 8 of them, Allianz, Bayer, E.ON, big names.
So they built this reported dominance. Then comes the next big test, 2008. the global financial crisis.
Right. And Aladdin, not even 21 years old yet, gets the call. From Wall Street banks, the Fed, the U.S. Treasury under Geithner.
That's the story. There are specific examples given, like when Lehman collapsed, the government reportedly used Aladdin to figure out what to do with Bear Stearns.
Wow.
Aladdin reportedly analyzed Bear Stearns' assets, advised on what was toxic, what to keep in that $30 billion rescue. The claim is pretty bold. It was a robot guiding decisions to save the U.S. financial system.
Wow. And after that, did its role change?
Well, the reported trend was that governments and central banks, U.S., Europe, Japan, started relying on Aladdin to direct where all that newly printed money should go.
The quantitative easing money.
Yeah, initially 2.5 trillion, later even more, like the 4 trillion during the pandemic. Aladdin reportedly helped guide it.
And there was a potential conflict of interest noted.
There was. It's pointed out that a lot of this money went into bonds and funding mortgage companies. Assets BlackRock and Aladdin were already heavily invested in. Concerns were raised, apparently, but got kind of lost in the crisis response.
Okay, so crisis averted, sort of. What's the next big shift?
2009. BlackRock buys Barclays iShares ETF unit.
ETFs. Explain those quickly.
Exchange-traded funds. They trade like stocks, but usually track an index, like the S&P 500 or DAX. They just buy the underlying stocks in proportion. Passive investing, mostly.
And buying iShares was big because
ETFs were exploding in popularity, and this reportedly made Aladdin the dominant force in that space, just as everyone was piling in.
became a huge moneymaker for BlackRock.
Massive. iShares was reportedly managing $900 billion over a decade ago. Now, the claim is 1 out of every 2 ETFs traded in Europe is a BlackRock iShare.
So dominance in ETFs leads to more automation.
Seems like it. Yeah. There's talk of a 2017 project codenamed Monarch.
Monarch.
Yeah, reportedly led to replacing human fund managers with funds run entirely by Aladdin's algorithms, kicking the humans out of the loop for certain things.
Is that common now? Robots trading.
Hugely. The claim is over 70% of U.S. stock trades are now done by algorithms led by systems like Aladdin. High-frequency trading machines trading with machines in fractions of a second. No humans involved start to finish.
Okay, let's fast forward. The last few years, Aladdin's reported assets hit 20 trillion.
And it apparently started consuming and controlling assets even faster, expanding into new areas.
Then the pandemic hits in 2020.
And again, the U.S. government, the Fed, reportedly call on Aladdin to help guide where that next wave of money, 4 trillion this time, should go.
And something unusual happened then, too. The Fed buying ETFs.
Yeah, that was noted as odd. The Fed started buying ETFs directly for the first time, which, again, raised those conflict of interest questions, given BlackRock's dominance in ETFs. But, crisis mode.
So beyond stocks and bonds and ETFs, what's described as the end game?
Well, one perspective points to BlackRock buying a company called Infront.
Infront? What do they do?
They reportedly collect data on assets owned by individuals. Private equity, real estate.
Ah, so Aladdin gets access to real estate data.
That's the report. And since then, it's apparently been integrating data on the global real estate market.
And the consequence? What's the claim?
That BlackRock and other big funds, using Aladdin's insights, started buying up single-family homes. Lots of them.
Outbidding regular people.
Reportedly, yes, because they have access to almost unlimited, super cheap financing. It's presented as a big factor in home prices jumping, 20% in the last couple of years, pushing out even big players like Zillow sometimes.
So the suggestion is Aladdin's goal isn't just Wall Street anymore. It's everything. All assets, public and private.
That's the perspective put forward, yeah. A move towards controlling or at least influencing all asset classes.
And then there's the political dimension. Larry Fink apparently built a good reputation in politics because of BlackRock's crisis role.
Right. Reportedly a member of the Democratic Party.
Yeah.
And you see these connections highlighted.
Like under the Biden administration?
Yeah. Brian Deese, a BlackRock executive, appointed head of the National Economic Council. One interpretation offered is that's like putting Aladdin oversight inside the government.
And Wally Adimo,
former BlackRock chief of staff, appointed assistant secretary of the Treasury. Again, the interpretation from one corner is that BlackRock is now both the Treasury and its advisor. Raises questions about those lines blurring.
Any other political links mentioned?
Friedrich Merz in Germany.
Yeah.
Chairman of BlackRock Germany's supervisory board from 2016 to 2020, before he went back into politics.
And there were some criticisms linked to that.
Yes, the cum-ex trading suspicions involving BlackRock. These complex, controversial trades exploiting tax loopholes. BlackRock's Munich offices were reportedly searched in 2018 related to this. Raised questions about how Merz might handle probes into his former company if he became chancellor.
So you look at all this, the scale, the influence, the political ties. The big question remains, just how powerful is BlackRock and Aladdin?
And you get different answers, naturally. On one side, you have people like Gerhard Schick, the Green politician, reportedly warning about this immense power, saying it needs to be curbed.
Why? What's the specific concern?
The ability, because they own stakes in so many companies, to just walk into shareholder meetings, talk directly to CEOs, make demands. That kind of access and potential influence worries people.
Okay, but what about the counter arguments?
They're there too. Like BlackRock manages the money, they don't own it. Clients decide when to sell, ultimately.
Right, it's not their personal cash pile.
And unlike a big bank, BlackRock isn't technically systemically relevant in the same way. If it failed, client money is supposedly protected, held separately. It wouldn't necessarily crash the whole system like Lehman did. Well, ETFs are huge, yes, but global finance is bigger. Hedge funds reportedly manage about the same amount of money globally.
Okay.
And while individuals are investing more, the really big players are still institutions, insurers, pension funds. They're the bulk of it.
So it's definitely not simple, not just Aladdin owns the world.
No, it's layered.
Mhm.
But even with those counterpoints, the consistent message seems to be that Aladdin is absolutely crucial now, essential.
Like oxygen.
That's the phrase reportedly used by some asset managers. It's like oxygen. You can't function, can't compete in modern finance without it. That says a lot, doesn't it?
It really does. So we followed this reported story. Aladdin, born from a massive failure, growing into a trillion-dollar powerhouse, digesting data, influencing markets, governments, even maybe your local housing market now.
The reported scale is just immense. How much data it consumes, how deeply it's integrated into stocks, bonds, ETFs, and potentially moving into real estate and beyond.
And this deep dive really highlights the scale and the debate around BlackRock and Aladdin's role. So why should you care? Because it's a system reportedly impacting global markets, maybe your house price, and potentially guiding decisions by central banks and governments that affect absolutely everyone.
And maybe a final thought to leave you with. As AI gets more powerful and systems like Aladdin become even more embedded in how wealth is managed, how decisions are made, what does that mean long term? Who holds the real power when a non-human system is so deeply woven into the fabric of the global economy?